All right, let's see what's happening here. If we're live or not. Oh, here we go. All right, just getting back in the saddle. I was out for a day. I was in Florida visiting my parents for Father's Day, so catching up a little bit, getting things going. Missed you guys. All right, you see the disclosure, you know the drill. While you're doing that, let's take a quick look at the chart of the S&P cash. My name is Scott Redler, Chief Strategic Officer of T3Live.com. This is your 6:30 club, where I get to talk about where things are at in the market, a little bit of the narrative, a little bit what the media's obsessing about, go over certain leading indicators, go over some things that could potentially make us money for the day, and we all figure out our process so we can do it every day. I've been doing it for 22 plus years. Thanks for tuning in. Let me say what up to some of my friends starting in Atlanta. I've been to Atlanta. It's pretty hot there sometimes in many ways. What up, Mumbai? How you doing? It's in the house. Good to see you. What up? Nebraska's in the house. We got Paris. There you go. A little, what is it, the afternoon in Paris right now? Oh, Tennessee. What up, Lancaster, Ohio? How are you? We got Atlanta in the house. We got Lake Tahoe. It's beautiful in Lake Tahoe. We got San Diego. I'm actually coming to San Diego next November for another Ragnar race. We go once a year to different states, and 250 teams of 8 race through the mountains or the desert, depending where we were at. What up, Mississippi? What up, Annapolis? She's all right. She's working, you know. Sucks getting old, but you know what? Not everybody gets old, so it is a privilege. But thanks for asking. I appreciate that. Tesla was in the house yesterday, right? The entire market was in the house yesterday, and then you wake up this morning and you're like, now why are the futures down 70 handles? But I think a lot of people woke up yesterday and were like, well, why are the futures up 65 handles? Pretty much the same narrative. That's kind of how predatory this market is right now, and that's what bear markets do. They ravage everybody. You know, if you were overly hedged on Friday because it was a long weekend, they squeezed the hell out of you. And then if you thought, hey, maybe this rally continues for a few days, it's the end of the quarter, some oscillators were really oversold. We were down 9 out of 10 weeks. And then all of a sudden today, you're like, geez, you know, they don't even give you a day and a quarter. So if anybody that bought anything yesterday, they're a little bit underwater and they have to figure out what to do. So you could have been on either side and a little frustrated. So the key is, you know, really be very careful with your prices, know your time frame, only take compelling trades, and sit in loads of cash and have absolutely no FOMO. Anyway, let's get to it. Let me lower this a little bit because, again, it hasn't been an easy environment. You know, the S&P hit a low of, what, 36, 38 last week. You would have thought maybe 9 out of 10 weeks, maybe we can get some kind of better bounce, and it's just not happening. You know, every time we think the market can go a little bit more, they sweep the leg just like Johnny. So anyway, you take a quick look here. You know, this is the the daily chart of the S&P cash. You know, so like I said before, this is 36.30, 36.36. That is the low of the year. So you had a basic day and a half bounce where you have 37.15 is yesterday's low, and it's probably a little bit below that. So I would think maybe if we were to hold here for a little bit, there was a chance for, you know, a retest of 38.10. A lot of people are like, Red Dog, how'd you come up with 38.10? I'm like, all I was saying is usually a prior low, which used to be support, turns into resistance, and sometimes you test those areas. We did it a few times. We did it on this bounce from 38.10 back to 41.76. So I was like, hey, you know, maybe we go up, and there's probably some room to 38.10. And so far, we went to 37.79, and now we got to figure out what's next. I think, you know, you wake up in the morning and you see the futures. Kind of what's leading the tape lower this morning is Europe. You know, you have the DAX down 2%, the FTSE's down 1.4%. The DAX already gave back pretty much what it was up on Monday and Tuesday. You know, and again, not much has changed. Some people are like, Red Dog, it's probably, of course, you know, Powell speaking at 9:30. Well, the Fed just spoke a week ago, and of course he's got to be hawkish. There's inflation everywhere around the world, and it's got to come under pressure. And then when we get some news that things are slowing down, everyone's so surprised. Well, that's what the Fed's job right now to do is trying to take down inflation. How do they take down inflation? They're raising rates. Okay, so people can't spend as much, and you know, they have to pull back. So then there's less demand, and prices come down. And what's one way to do it is also to get the stock market down, because they have to get the wealth effect under control. And there's just all these things. That's not what you have me here for. You have me here to try and figure out, how do we navigate the day. One of my sell rules is, whenever a gap is in your favor, you take it. And I did go out with some risk on Friday. And from Florida, I was pretty much selling a big portion of all the little things that I had on. So, what I almost did, though, at the end of the day is I was like, maybe we get a little follow through. Hey, Tesla's strong. Let me maybe buy a little Tesla for overnight, or Apple or Microsoft. And thank goodness I didn't do that, because I'd be starting out in the hole. Because what I did see out of the corner of my eye, I'm like, wait, Meta is at new lows of the year. Netflix is red. The VIX is coming up. I'm like, there's no reason for me that I'm in Florida to all of a sudden just put some things on the close in order to get a little bit of follow through, because follow through has not happened in this market. That's how careful you have to be. You could be almost perfect and still lose money. So if you make a mistake or do something that you shouldn't, they're going to punish you. And they've been doing that for a while now. So anyway, if you go here and say, let's see where the SPYs are this morning. The SPYs right now are at down 1.3% at 369.84. Okay, so before we get into the SPYs, because a lot of you traded, basically someone's like, hey, Redler, could you show me the weekly chart? If you look at the weekly chart, here's your S&P cash. Some people are like, hey, I don't really trade for a living. I'm just trying to put some money to work as the market goes through a corrective phase in S&P funds. So I give you guys, my blood on the street account, which some people do model that don't trade actively for a living like we do. I have 7 different accounts. 4 of them are for active trading that I get paid quarterly. 3 of them are for the long term. 1 of them is a blood on the street account, which I've only put to work twice in the past 10 to 12 years, and I started doing it again. So if you look here at the weekly chart, okay, I think the first tier I put in was about 17% off highs, somewhere around here. And then I put another tier in last week pretty well, around 36.45, which was about 24% from highs. And then I mapped out 3 more levels. You have 35.11, 33.85, 32.28. Some of these things, this maps out to the pre-COVID high, which some people are looking at. And then you have this, congestion. So unfortunately, it feels like that's where we have to get to. Some people are like, oh, just wake me up when we're there. You know what? If you trade for a living, you got to deal with it. You have to be patient. You have to go day in, day out, and you have to have your self-control, which is why your routine is very important. You can make some money long, short, or just sit in a lot of cash and really pick your spots carefully. I saw some of my fundamental guys who were talking about, the PE of the S&P, what they think earnings are going to be next year. Some guys think we're going to be in a recession. Some people think we're not going to be in a recession. Everyone has opinions everywhere. So I'm going to let everyone's opinions go rampant. I'm going to let the market show me. I'm going to trade every different account I have based on its time frame. And I do recommend you do that. Separating accounts could be helpful. You can have an active account where you just day trade and take advantage of big gaps like this that sometimes are emotional. You have a swing account. If the S&P is above the 8-21 day and markets are healthy, you have a lot of swing trades on. But when you're in an environment like this, you have to be in loads and loads of cash, because you do not sit in things for more than a tactical type of setup, in a swing account. And then options you could use for binary events. And when we're in a healthy market, all 4 things are working together at the same time, including my box. But when it's not, cash is king to me too. So anyway, I've been trying to navigate it. So here are your levels moving forward. So far, in order to get to 35.11 or 33.85, it's going to have to get below and stay below 36 first. That is your new point of reference, or that from last week on a weekly basis. I have the wrong one here. I like to be kind of perfect, or at least have to be the right numbers. Okay. Some people are like, hey, well, I think we're going to bounce to the 8th day. I think, they want to mess with all the bears. We're going to get up to 39.46. I'm like, well, in order for you to get to the 8th day, which we've tested a few times during this decline, so sometimes you do it again. That's how institutions get rid of some of their stock, is that they squeeze shorts where they have to cover. So when they're buying and covering, the institutions are selling their stock to them. So in order to get to here, it would have to get them and stay above 38.10 first, which we're not there. Do I have any option spreads on? On Friday, actually, when we were, somewhere around 368, I was selling some puts. I was selling some, I don't even know exactly which ones, which got me synthetically long because I knew I wasn't be here on Tuesday. So I have some puts sold below. I don't have any call spreads long on. That was the last week. when we were in those tight ranges. I had puts on, and I had a bunch of calls on, and then on Friday I actually sold puts below, saying, hey, I wouldn't mind being long the SPYs at 350 or whatnot. But anyway, that's another story. So if you go here to the SPYs, this is what, 362.17. So that's your low. This is 340. This is 320. So go to the week. I'll go to the daily today because some of you guys are trading the dailies. So here you go. Let's get a close up because some of us, again, pivots are very important. Those are your little battlegrounds that people trade against somewhat. This low is what? So where is so this is 364. This is 362.18. That was your doji after a big decline. That's why I figured maybe we get some kind of bounce into this week, and that's what yesterday was. And then this high here is what? This is let's see, you can't really see there. So here now you can see the high 369. So this is Friday's high. The low here is what? I wasn't here yesterday, so I don't have all my little 371. Okay, so there you go. This is a small little gap here, not a big gap like the ones from above that I thought, hey, maybe, I'm like, hey, maybe, we pack and fill above this gap and then potentially go higher at some point this week. But again, that doesn't have to happen. But if we were to hold above 369, okay, that would be somewhat of a win. So if you look here, okay, the SPYs are 369.50. So if we were to hold around here and come off lows a little bit and build a little inside range, there is a small chance that maybe this bounce continues. If not, it is what it is. You better be that much careful. So I would say, what would be a win for the active bulls today? Not that there's a lot of active bulls out there, or just for trading purposes. If we were to hold 369-ish and close a little bit above 371-ish, that might give a little bit of confidence that this low could stick for more than a few days. If all of a sudden we close below 369, then it's going to be like, you know what, we got to be very careful because you have no idea what's happening here. Real quickly, I'm just going to, some guys like Red Dog, why did you say that maybe there's a low in Bitcoin that could stand for more than, a week? I'm like, well, the Bitcoin accelerated through 20,000 after coming in from, from November, it was at, 67,000, but it's been stair-stepping lower and lower and lower. Then finally on Saturday, at that acceleration below 20,000, which was a psychological number, and it was also the prior high from 2017, something like that, and then it hit 17. But really, what was impressive was how fast it reclaimed the 20,000, and Ethereum reclaimed the 1,000. What the beauty of crypto is, you can have good till cancel orders, and so you could be sleeping and get filled in your orders. Sometimes you don't want them, but if you put them in compelled spots, I got filled, which I showed you my good till cancel orders around 18.2 in Bitcoin, and then I was able to sell some at 20,000. And then yesterday I did tweet, to especially the Redler All Access, that I got out of over 75% of that trade, at 21.2, and now I'll see what happens next. Okay, so if you look here at Bitcoin, okay, first of all, it's been battered and bruised and gave you so many ways to get out of the way with Bitcoin. And it's been a little bit of an indicator too. This was when, Bitcoin said goodbye. You were below the 821 day. Red Dog wrote an ebook saying when you get below the 821 day, you take risk off. And I went to about 75% cash in most of my crypto stuff. But anyway, then remember this kind of capitulation move lower, where this was a key area at that time. And then, did a little Red Dog reversal here. And then you went from what? 34,000 back to 45. This was a 10,000, whatever you will call it, dollar rally in Bitcoin. And then it went sideways, broke above a small little trend line. And then from here, it just started stair-stepping lower. This was a get out of Dodge signal. This was another, make sure to reduce risk. Then you had a small one here. Remember, I'm like, guys, if we break 29, this small little pennant could go to the downside. And then we broke 25, which was your point of reference right here. And then, obviously 20,000. But so this little, move lower Saturday night that got reclaimed fast was a little bit of a washout feeling. We did bounce to 21.7, and now, I don't know. We'll see how we go sideways here. I'm holding about a third of what I picked up in the hole with 2 good till cancel orders. I thought maybe, we could bounce back towards 25 because sometimes you test prior pivots, kind of like what you did here. This one actually pushed through it. So we'll see. Last night when I saw Bitcoin, back down below 21,000 near 20,002, I'm like, the futures are probably lower. And equities, I guess, you know, you got to look at the usual suspects. You got to look at Apple, you got to look at Microsoft, you got to look at Amazon, you got to look at Tesla. Tesla, I didn't look at since Friday. So anyway, Tesla, I would say here, you know what, you look for little clues. What is this? This low here is 673. So Tesla was one of the strongest ones yesterday. So if Tesla can't, you know, put a low in the first 5, 15, 30 minutes, chances are, you know, this market's not going to be able to find some footing. So this was, what was this high here yesterday, 730. So I would say Tesla could be, you know, a little bit of an indicator on whether or not the dip today could be viable. This is 675. Here, the reason some people were a little long Tesla coming into yesterday was because you had the low of 620, a higher low. So when the S&P and the Qs made new lows in the year, the things that didn't, that showed a little relative strength, acted a bit better yesterday. So now what? Let's get this out of the way. So let's do one more time here. You know, let's see where Tesla is right now. So I think that'll be something to watch if you're looking for you know, an indicator or clue. So Tesla right now, okay, is at 693. It's only down 17, so that's not so bad. You know, it's still above, okay, yesterday's low of 673. So I just showed you the SPYs are at yesterday's lows already. The Qs are probably at yesterday's lows, and Tesla's at 694, somewhere over here. So maybe that's something, you know, to use as a gauge. And maybe if you didn't take it overnight and you just traded yesterday, because there were some ways to get in there, you know, you could be buying this reverse a level. So we'll see if all of a sudden it opens at 694 and it is just a wet blanket today and it's sold all day, then you'll kind of know that, hey, you know, you got to be careful. But again, look, see how this is at 673 and this is at 694, showing relative strength. You go back to the SPYs, okay, the SPYs are basically below yesterday's lows already. So it's showing that Tesla's still showing some relative strength. Let's see about like Apple. Apple hasn't been special whatsoever. This was yesterday's low, 133. Okay, so the question is, you know, maybe can Apple hold 133 and digest, because obviously Apple is heavily weighted in the SPYs and the Qs and this and that. So again, let's go to, you know, where's Apple pre-market? Apple, which I think still is going to have a really tough quarter, and I think you better be careful with Apple. So Apple right now is at 133, which is right there, 133.40, 133.07. So maybe if you're, you know, not in many positions because you're tactical, because this market is treacherous and there's no muscle memory from one day to the next, you would look at Apple and maybe it puts a low in the first 3 to 5 minutes, and if it could hold this 133-ish, then perhaps it's still going to defend this 129 for a little bit. If it gets below and stays below 133, you know, and then Tesla is a wet blanket, chances are, you know, this little oversold bounce, if that's what you want to call it, from Friday into Tuesday is over. If this holds and tries to go sideways a little bit, and, you know, Tesla goes from red to green and the SPYs hold that level that I just gave you, hey, maybe, you know, there's a little bit of, you know, a different type of trading there. Apple reports July 26th, will not do much till then. Yeah, it's true. You know, it's only June 22nd, so we got a whole month of range trading, okay, using little setups. That's what you have to do. Little setups to net money. You're not looking to make a lot of money in this environment right now. You're playing defense. You're looking to put on compelling trades with decent setups and figure out, you know, what's the easy trade and where will it have some problems where you don't want to overtrade it and give money you made on the easy trade. I sometimes think to myself now, say, is this trade worth it? Like, I wasn't in Apple from Friday into Tuesday, so yesterday at the close, I saw, oh my, Apple held up, Microsoft held up, Tesla held up, and I said to myself, hey, what if we get a little bit of follow through to yesterday's, you know, up, you know, rally? You know, I want to have a few more things on, and I said, you know what, is it really worth it? You know, when have we had follow through? Is it really worth taking the risk overnight when Apple, what's it going to be up another $1? What's Tesla going to get at $7 of follow through? And what if it doesn't? Then I have to work around it and salvage the trade. And so anyway, saying to myself, is this trade worth it? You know, save myself a bit more of a complicated morning. So maybe that's, today's your birthday? All right, happy birthday. Let's make some money. We'll do that. We'll try. All you can do is try. All you can do is the right thing. If you do the right thing over and over and over again, you will net money. Okay, if you don't add to a winning long, and ruin your cost at your price, you'll probably be able to win that money. If you don't, lately too, it hasn't been the easiest thing to do. Even though we've been making lower lows over the past few months, some guys had loved to be short, like Red Dog. It's been so hard to be short. Every time we close, on our lows, we gap up 30 handles, and then you have to wait till whenever that rollover is, and sometimes that's hard to do. I'm like, I hear you. It's just the market we're in, guys. We can't control the market we're in. The only thing we can control is our keyboards, our process, and how we go about it, and how we keep our minds sane, for when there's more continuity and things are more conducive to your style. But anyway, it's 6:51. I got to go catch up with the alpha team. That's where about 500, 600, 700 traders talk all day long. I talk to them on my microphone right here, from 9:15 to 11:30. I'm talking about what I see, where the relative strength is, what I'm looking to do. They get to see my trades live. Then I'm about to put about 40 different charts together for Redler All Access, which is my morning preparation that goes out to them prior to about 8:15. So right now it's 6:52. I got to get myself moving. I appreciate you guys. Thanks for tuning in. Stay strong, stay mentally strong, and you know what? You can do this. I promise you. Don't go looking for the next hot job. I did that video almost 16 months ago where everybody was asking me if they, should leave their job to be a trader, that they thought it was so easy. And now people are asking me, can I continue to be a trader? Is it always this hard? Well, and then there are some people that say, hey, I'm at the highs of my year. Congratulations. There's lots of different sides of the coin, not just two in trading. So figure out what side works for you, work on it, and then if it's not your side of the coin, you got to work on that too. Got to work on everything in life, right? So it's a process, and hopefully you're enjoying the journey, because once you're at your destination and your number rings, then there's no more left, which is why, you got to enjoy yourself, and appreciate the little things. Later, guys.